Thursday, October 13th, 2016. Monaco 64, home of alternative economics and contrarian views. I'd like to talk about central bank control of the gold market or central bank price manipulation. A lot of the viewers of my channel probably know quite a bit about this subject, but some of you don't. You've asked me questions recently, what do you mean by that and why do they do it? Well, first of all, I'd like to start with a few quotes related to gold by some important financial powers that be. The first one is Paul Volcker, who was ex-chairman of the Federal Reserve from 1979 to 1987. He was the chairman before Alan Greenspan. He was the man who squashed or quashed inflation in the early 80s by letting interest rates in the US go up to like 20% in 1980. So this is what he said about the system, and I quote, "It is a sobering fact that the prominence of central banks in this century has coincided with a general tendency towards more inflation, not less. If the overriding objective is price stability, we did better with the 19th century gold standard and passive central banks, with currency boards, or even with free banking." I think free banking, he means no central bank, because the US didn't have a central bank from, I think, 1836 to 1914. The truly unique power of a central bank, after all, is the power to create money. And ultimately, the power to create is the power to destroy, end quote. So what does it mean by the power to destroy? Well, it's the power to destroy money, because if you create too much of it, you destroy it because there's a infinite supply of it. And that just goes to show why it is important for central bankers to keep the price of gold in fiat money under control, because if it gets out of control, it will destroy the central bank money. And that's what Paul Volcker was saying in that quote. The other quote I like to bring up is from Eddie George, who was the governor of the Bank of England prior to Mervyn King. And this was in a conversation with a CEO from Lon Min, Nicholas J. Morel, in September 1999. And I quote Eddie George. He said, "We looked into the abyss if the gold price rose further. A further rise would have taken down one or several trading houses, which might have taken down all the rest in their wake. Therefore, at any price, at any cost, the central banks had to quell the gold price, manage it. It was very difficult to get the gold price under control, but we have now succeeded. The US Fed was very active in getting the gold price down. So was the UK." So those are the quotes I wanted to bring up. The other thing I wanted to bring up is the Bank of England. Bank of England holds 300 tons of gold for the UK government, but it also holds 5,134 tons for other countries. It acts as a bank, gold bank. And this was from Bullion Star article, Central Bank Gold at the Bank of England, from September 2015. And those Bank of England numbers are from February 2015. And then if you go into the Bank of England website under the markets section, and I quote, it says, "The bank's markets area manages the bank's balance sheet, implements the policy decisions of the Monetary Policy Committee, provides liquidity insurance to the financial system, and manages the UK government's foreign currency and gold reserves." So what is it? What does it mean managing, 300 tons of gold? Don't you just have to keep it in the vault and make sure, maybe dust off the bars? Does managing mean that you lease that gold? It's not too much gold, 300 tons. But it gets interesting because as they hold over 5,000 tons for other central banks. There's another article here, the same article from Bullion Star. It says about the Bank of England and its relationship with the LBMA, which is the London bullion market. And it says, and I quote, although the Bank of England is not an LBMA member, the Bank of England vaults are a critical part of the LBMA gold vaulting and gold clearing system. And LBMA bullion banks maintain gold accounts with the Bank of England, which facilitate, among other things, gold lending and gold swaps transactions with central banks. So who are these LBMA bullion banks? Well, they're Deutsche Bank, they're Goldman Sachs, JP Morgan, Barclays. They're all the big international banks. So they're using all the gold, not just the UK 300 tons, but all the gold at the Bank of England. They're using that, they're borrowing that to, because if you borrow the gold, you can short the gold market. And that's how they control the price. And in London, you can borrow something, which means to hypothecate it many times over. So, if they say, oh, we'll lend you a ton from the Central Bank of Greece or something, they'll take that ton and sell it 100 tons, 100 times. So that's what happens at the LBMA. It would be interesting to see, a client agreement between the Bank of England and a foreign central bank in relation to the gold that they have with the Bank of England. I'm sure there's a clause there saying that the gold will be used for lending activities in the LBMA. But of course, they're not going to show us because it's a private document between two, a banker and the client. Bank secrecy. So why am I talking about this now, about the Bank of England? Well, because I think personally the takedown of gold in the first week of October this year, or up until now, from around 1310 we were at the end of September. Gold went all the way down to 1241. I think that was the low last week, while the Chinese were out for their holidays, national holiday for a whole week. I think that was orchestrated by the Bank of England with the help of the bullion banks, with the help of the Fed, with the help of the Bank for International Settlements. And why do I say that? Well, I think the Bank of England and the government, they decided to devalue the pound even more in the last couple of weeks. Many people say, oh, but it's because of Brexit. Yes, that's what they tell us. But end of September, the pound was at 130 against the dollar. Right now, we're at 121.67. In less than 2 weeks, we dropped quite a lot, from 130 to 121.67 for a currency that's supposed to be a hard currency. That's a huge drop. And what's that got to do with gold? Well, the price of gold in sterling right now is 1,034, which is up more than 40% on the year. We ended last year at 716. After Brexit, on July 6th, we made a high of 1,056.79 as per the PM fix at the LBMA. So that's a key level there, 1,056, 1,060 area. So that's been the high. If gold hadn't been brought down while the Chinese were away last week, let's say, for example, we're still around 1310, 1320. It would take 1320 and you divide it by the pound here at 121.68. That gives you roughly around 1,090. We would have broken through this year's high. We'd be up 52% on the year. And that would have raised alarm bells with the British public, in my opinion. I think it's already raising alarm bells, being up over 40%, even though not many people talk about gold. They look more at the FTSE. So that's what I think happened. The Bank of England orchestrated with the Fed and the bullion banks say, look, we're going to have to keep gold down because we're going to bring our currency down, because we need to bring it down, because our economy is slowing down. We can use Brexit as an excuse. You know, I've made a video before and about Felix Sommeray, who was a banker in the early 1900s, and he said only governments through their central banks can create inflation. You saw the quote by Paul Volcker. Central banks have the power to destroy their currency. How do they do that? Well, by creating us more and more currency. And what's the Bank of England been doing since Brexit? Well, they've cut rates and they've announced that they're going to print even more money. I mean, if they raise rates, which is basically what they should do to protect the currency, the pound wouldn't be down here. So it's not Brexit that's bringing the pound down. It's the government with the Bank of England by design. But they need to keep it controlled, and that's why gold is so important. If they don't control the price of gold, I think the pound could be even lower than it is right now, and they need to control that drop. And it's easier to control gold than it is, you know, if you leave gold alone, it's more difficult to control the currency. But gold is a relatively small market, but it's a very important market. And that, in my opinion, is what they've done. So I'd like to end this video by showing you a chart. And this is from the LBMA data. And it's the price of gold in sterling since 1968, when the LBMA, I think that's when they were founded, the LBMA. So you can see this chart. Back in 1968, on December 31st, 1968, the PM fix for the pound price of gold was 17 pounds and 57 cents. So that's that line there, hugging the zero, 1968. And look what we've done, since then. We're now at, at 1,035. The high on September 6, 2011, the high PM fix in sterling was 1,182. So yes, gold, drops, moves sharply once in a while. It's volatile, but generation-wise, you can see how our currency, the British pound here in the UK, has been debased so much. So the next target, I think, if we break above 1,060, we could see another big move up in gold and sterling terms. Same thing is happening to the dollar. Right now I'm focusing on the dollar price, but I will do a video later about the US dollar. The chart doesn't look that different. The PM fix for the dollar in 1968 at the end of the year was $41.90. So that's it for now then. If you enjoy my video, please like it, share it, and if you haven't subscribed to my channel yet, please do. And if you'd like to donate, which is a way to sponsor the channel, there's some links below in the description. Take care. Bye.